Hey, I'm Dan Fitzpatrick at StockMarketMentor.com, and it's Friday, February 2nd, like ugly, ugly day. So if you look at Symantec, they report great numbers before the bell. Stock's up 3%. Yay, that's pretty good. But it's down 4.5%, almost 5% from the open. Here's the thing. This is a stock that you can buy, not just yet. They actually pay a decent dividend for a tech company, a decent dividend. But there's a lesson here. First of all, on the weekly chart, sideways consolidation, trending lower. You don't have to buy this right now. There's no assurance that the stock's going to keep moving up 21, 22 bucks. Might move down 19, 18.50, 18. So you have to manage some risk in this. Frankly, there's not much of anything that I'm buying except the bear's argument. But the reason I wanted to cover this stock was because it's a good lesson. If you're a pro, or if you want to trade like a pro, you're looking at this, and you're short this stock 2080 something, even at 2060, you're short this stock. And by the end of the day, you've made 4%. Because what happens is, gaps up on really, really strong earnings number, but there's no follow through. You're either going to have, and it's one or the other, you're going to have a gap and run where the stock just gaps up and then it keeps running, or you're going to have what's known as a gap and crap. This would be that. And if you look at the SPY, you'll see that here, this gapped down and kept going today. Why am I saying that? I'm telling you that. Let me get rid of this. Okay. I'm telling you that because when the market is weak, you know what the environment was on Friday. When the market opens up weak and your stock, no matter what it is, opens up really, really strong, expect selling to come into this stock. This is what the pros do. There's a huge demand for a stock. Great. I'll supply it. I'm just going to mark it up a lot, just like anything else. So when the market is weak and a stock gaps up, you want to sell that stock. You don't want to be buying it. Because even if the stock, after it gaps up, even if it does keep running, it's not going to run that hard because there's such a sell bias in the market. So in the future, when you're seeing this, and hey, earnings reports come out 4 times a year. There are so many opportunities to make these kind of trades. Watch for them. You see a stock that's up 8% from close to open, that's a stock that you want to sell. That was the case here with Symantec, but it really comes from a weak market here. Okay, that's it. Members, over to the weekend update. Got a lot of stuff to talk about with respect to the market. Basically, there's one position that I want you to have, and I want it to be a big one.